Famed investor Tom Lee of Fundstrat is saying Tesla might make an explosive move upwards. In a new video, he explains why he thinks Tesla will not get canceled and will not get affected long-term by the current brand crisis. He lists 5 major reasons why, and he'll keep Tesla in his fund. Second, another big portfolio manager, Nancy Tengler of Tengler Investments, is also out buying and accumulating Tesla right now. Got Jeff Lutz with us today. He's a multi-decade supply chain executive, chief quality officer. He's now CEO of his own supply chain consulting firm. Welcome, Jeff.
Hey, Herbert. It's always good to hear what people are saying about the stock, the analysts on the street.
Yeah, specifically Tom Lee. He's a big influencer out there. Is one of the go-tos by CNBC and a lot of the news outlets. And then he's created a new fund, an ETF, granny shots. Tesla's one of the big ones. He calls it granny shots because that's what you do when you're taking a shot on the basketball court and you're using the underhand approach, meaning that stick with the easy things, the things that are highest likely to succeed. And he did put Tesla in there. In his latest video, he says why he thinks the Tesla stock should thrive once it's past the MyPillow moment, this brand crisis that MyPillow moment went through. Let's listen to what he said here.
In our Granny Shots portfolio is Tesla. It's down 31% in just 1 month. Now, there's many reasons people are going to speculate why Tesla's falling. Stocks plummeted. But we think it's mainly because Elon Musk has become a lightning rod for those who don't like what the White House is doing. And by implication, they're blaming it on Tesla. For instance, this is from former Vice President candidate Tim Walz saying if he needs a little boost during the day, he just looks at Tesla stock. And even a late night talk show host is encouraging its audience to vandalize Tesla vehicles. And there's also media, perhaps misinformation, but adding to this concern, there's a survey that a German newspaper put out pointing out that 94% said they wouldn't buy a Tesla car. It was an online survey. However, by the end of the day, those numbers had flipped actually, and it turns out 70% of Germans would buy a Tesla. To me, this is reminiscent of what happened with MyPillow. If you're not familiar, MyPillow was a very popular pillow, but it turns out the CEO became embroiled in controversy when he claimed the 2020 election was fraudulent. And as a result, he lost many business partnerships. Well, I think that that's the same moment. This is the MyPillow moment happening to Tesla.
Okay, so let's pause there before we get to his 5 reasons why he thinks Tesla is actually a good investment and why he's going to stick to his guns. Thoughts on what he said there? This is, the similar thing that's happened to other brand crises. What you're thinking about the kinds of things he pointed out?
Yeah, I think the only similarity there is they tend to be limited, short-lived. But I mean, you can't compare Tesla to MyPillow or Tesla to even some other brands that were targeted. There's some great brands too. Target, it was targeted, for example, no pun intended. Bud Light and so forth. But this is different. You literally have the Einstein of our current generation. So you have behind this company and behind his companies, and you have innovation. You have a team that he's built in his likeness at Tesla over the last 15 plus years that is second to none. Even if you extracted, Elon is the CEO, and this is the difference. And then we're going to get into some of the other analyst commentary. There's analysts who are like, "Oh, show up at a factory, take a selfie of yourself, do what I." It's all noise. That CEOs set direction for the company. Their vision. They're about vision, leadership, and culture. And Elon does this to an extreme, and none of that has changed with Tesla. This is still his multi-year vision. This is still his company culture in terms of how the work is done, cost culture, efficiency, as well as risk taking. These are all, emblematic of the co-location, the collaboration culture that he creates when building products. It's different than other companies that work in silos. That is what a CEO does. Did enough raw material get, into Berlin or did this customs, that was, Elon needed to do that, 6 or 7 years ago, especially with the Model 3 ramp. And in certain situations, he's had to inject himself into more of the tactical base. But over that 6 to 7 years, those people that he hired in his likeness that would have been there for 8 to 10 years have now been there for 15 or 17 years now. There's so much more experience. They take care of the day-to-day on the product. So people are always asking that question of like, who is that clear number 2 at Tesla? And what I would tell you is there's literally 15 different departments where the leadership of those departments have been created in his likeness, and he's mentored and driven that culture. And when you do that over that many years and these people stick with you for that period of time, they operate like you. They act, I'm not saying that they're all the capability of Elon Musk, but they work and act and behave and execute in his likeness. I think that's really important to understand. So Tesla is a much, much different company, highly, highly innovative. Look at what Tesla has done just over the last 10 years in terms of innovation of creating the EV supply chain in the United States, making EVs mainstream, essentially globally, which prompted this spurt or growth from all the Chinese who've since 2019, when Tesla entered, have since, copied a lot of this and grown. I'm not saying that everything they copied, China is certainly innovating, but what Tesla has done in the last 10 years with EVs and what's coming with autonomy at scale and at a price and a cost structure, it's just unmatched innovation relative to anything happening in Silicon Valley, or quite frankly, anything happening in China.
I'm laughing a little bit because it sounds like this is what Tom Lee's about to say. So let's listen to what he said. Very similar to what you're saying. Exactly. Let's watch this.
Can Tesla get canceled? Here are the 5 things that I believe represent the competitive strength of Tesla. And I'm going to walk you through it. The first is the strong brand and customer loyalty. I mean, it is synonymous with innovation. But this is exactly what is being questioned today. Historically, roughly 38% of Tesla buyers were Democratic. By 2024, though, that had really changed quite a lot because Democrats were fleeing the brand. So I think Tesla was already suffering from a shift away from buyers based on political affiliation. And President Trump, in just last week, actually talked about buying a Tesla and supported the brand. I'm not sure that Tesla is going to be able to necessarily recover those Democratic leaning buyers, but I think it is strange that somehow Tesla has become a political brand. But there's other reasons to consider. Tesla has an enormous lead in full self-driving, robotics, and AI. That is not changing just because some folks are trying to cancel Tesla. They have a high-quality employee base and an innovative culture. Tesla attracts the smartest employees, the smartest candidates, because they are not only drawn to Elon Musk, but also to the success of the company. They have superior battery technology and a supply chain that is unmatched. And finally, they are a really enormous lead in scale manufacturing. They're one of the few companies that makes money selling electric vehicles, and they have an extensive supercharging network. So if you ask me, is Tesla threatened by the PR nightmare that's happening currently? I don't think so. I think it is ultimately going to be short-term noise. And if you look at the stock price, Tesla has seen this before. The stock has gone through periods of consolidation and then made explosive moves. So it's possible Tesla right now is consolidating, but does that mean it's not going to do what it's done in the past, which is make an explosive move? I don't think so. So to us, we still view Tesla as a granny shot.
Yeah. Okay. So he's still very, very bullish. He'll keep it in his ETF fund. He still expects it to actually do that explosive move. And he listed out those 5 reasons why. What's your reaction to what he said?
Well, it's good to see that Fundstrat watches the show, because all of those things have been talked about ad nauseum on this show, Herbert, and your others, and they're real, and they're built up over many years. That's why they can't be canceled. Those things don't go. The point Tom was making is those things don't go away overnight, and they don't go away at all, essentially. So, like we've talked about in other shows, you're going to have this fringe element that's happening, that's acting out, and what you see on X, what you see on the internet, and what you see in mainstream media is an amplification of that. Great companies do this, and great analysts also look at sentiment. If you look at the reporting on Tesla and you look at the percent positive, negative, and you can see the flip that's occurred on it. And it's been that way for a long time. Some of it before was the lack of advertising driving it. There's all these arguments of, have a PR team, not have a PR team. I think during crisis periods, and we debated this even on Cybergoals as well, there may be some value in kind of walking the public through this communication, like this noisy quarter that we're going to have, like walking through that and showing this is what's happening over the next 6 to 12 month horizon in Tesla. This is what's happening today. We took the best selling car in the world and we changed over its supply chain intra-quarter. But yeah, you're going to have a lot of noise in the system. But what Tom's point is, those things that Tesla built, that brand loyalty, and Net Promoter Score is a globally recognized metric that many Fortune 10, Fortune 50 companies use. I used Net Promoter Score as well on the quality side, and you try to understand people that own your product, their willingness to recommend it to others to buy, and their willingness to repurchase it. And Tesla is not only, it's perennially measured in the mid to upper 90 percentile. I mean, it's not even close in terms of other car brands. Rivian sometimes is up there pretty high, but again, they're supply limited. When I say they're supply limited, they're demand limited due to their cost structure right now. When they start producing vehicles at lower price points, they could put themselves in a much better position. But the rest of the auto industry is literally in the 40 to 70 percentile range in Net Promoter Score. And here's Tesla up in the 90s. And that 90s is, if you look at other industries, if you look at smartphone, for example, iPhone's not even that high in terms of Net Promoter Score. Now, this changes, shifts here and there, but in general, Tesla's just miles away from everyone else, and that customer loyalty does not go away. All right, so Tesla has these very, very sticky things. And the other thing is, people, again, you're trying to cancel Tesla. If you're in the US, that's half of the EV supply. And the other half of the EV supply chain is not ramping up. They've come out publicly and they've pulled back on their CapEx. They've come out publicly and said, look, we're not really we're introducing some new models. And by the way, they're embroiled in this tariff controversy as well as the top two vehicles, the Chevy Equinox EV and the Ford Mustang Mach-E. They're two, volume runners are final assembled in Mexico. So you don't have an EV supply chain to turn to as well when you're trying to cancel something. So anyway, the whole thing's kind of bizarre. What Tom is saying, this is a sentiment-driven sell-off. There are some fundamental things that have changed, and I think people should be aware of it. But I also think that was known on January 29th, and this is why I argue, back and forth with some of the analysts of, oh, you're seeing a deterioration in the Q1 numbers. Well, not really. I mean, you would have known. I could have told you what the production for the quarter was in January 30th, probably, if you asked me. So just tremendous amounts of noise. There is signal in the system. We have this credit card data. We have data that shows as the Model Y return to inventory what it looks like. But what Tom is saying here is mostly sentiment driven. A lot of consolidation that's occurred in the stock. Big move up after the election, consolidation. Now let's see where it goes from here. If you look at the forward catalyst for the company, you would see that they're going after, from a portfolio perspective, they're going after some of the biggest things out there in vehicle autonomy and humanoid robots. And now what you have to do is you have to think about what's their probability of success and how much of that market are they going to garner.
I think you made a very big point there about the Net Promoter Score. That's a good one. So despite the sentiment issue, the brand crisis happening now, to what extent is the Net Promoter Score, which is the willingness of a customer to recommend the product to friends, if it's so good at 90+% of customers who own a Tesla who are willing to recommend it to friends, sure, it might be reduced by some of the brand crisis, but it's just so high that, like you just said, compared to other, even Apple and others, it is so high that, it's hard to see that that's going to plummet to zero because the product is so good. That's a very good point. Jeff, if this brand crisis continues and there are people who boycott Tesla for a long, long time, years, as they introduce new innovations, so let's say robotaxi and robots, I think we agree that robots selling it to businesses before they even go to consumers, that's unlikely to stop Tesla from becoming the largest company in the world if they just keep selling it to factories and businesses. But what about robotaxi? What's your thinking there? Would that be affected if, let's say, next 6 months there will be a boycott and people won't take a robotaxi ride through Tesla?
The answer is well, anything can happen to some certain level of degree or some certain percentage. The question is it pervasive and does it actually impact the business? And this goes back to what is the cost structure? What's the quality, the performance of the offering? The same reason that drove the net promoter score high on Tesla vehicles is going to drive a very high net promoter score on Tesla's robotaxi. It's also going to be this great vacuum that's going to occur in terms of the total available market for rideshare. And let me describe what I think is going to happen. When Tesla gets the scale on robotaxi, and they're going to get the scale because they're going to have the lowest cost structure, they're going to vertically integrate the stack, starting at the silicon. Remember, starting at the silicon, the inference silicon that's in the vehicle, all the way to the cleaning operation and charging operation of the fleet. And when you there's nobody out there that can vertically integrate that entire stack. There's not a single company. And each element that goes in that stack, the fact that you're doing it yourself, number one, and you have this culture of efficiency, and you have this culture of best part is no part, and you're going to you have a high probability of creating the lowest cost structure. Even starting at that base layer of silicon, Elon reiterated, I think even last week, that they cannot, in the town hall, they cannot go out and buy a better inference solution, value for the money, and put it inside of a Tesla vehicle today if they tried. They couldn't. Meaning the AI-4 computer designed years ago, put into production years ago, is still better than anything they can buy today on a value per dollar basis. Why is that the case? Well, number one, they designed a really good product. Number two, if you wanted to buy somebody else's solution like NVIDIA, you're going to be paying them a 70% gross margin. Okay. So now take that same thing and now multiply it in the stack all the way up to the charging and the cleaning operation of the vehicle. And so with robotaxi, your question is could this fall under some sort of brand concern? Of course. You have Waymos today that are being, there's drunken, disorderly people and they're doing weird things to them. And that's fine. That's kind of the fringe. That's a bit of the noise. You'll probably have that happen with robotaxi. I think people need to be reminded these things have 8 or 9 cameras on them. They're AI equipped. They have all kinds of information and data that they're gathering besides, by the way, what you see in terms of what's on the camera image. And I think that coupled with proper publicity around what happens when you vandalize things that you don't own, which is happening now, I think that will help. But the macro, the big point I was trying to make on the whole thing is Tesla's going to create an advantage in cost structure, and they're going to create an advantage in the product offering where the gap is so big between what you can get getting into a Tesla robotaxi and what you can get elsewhere. And you're going to see it in the dollar value when you go and summon the car and you say, I want to go to the airport. And the other ride share is going to be some number like $30. And you're going to see some number from Tesla that's a fraction of that. Then you're going to get the ride comfort. Then you're going to get all the cool tech, and you're going to get Grok inside. And then Tesla on the other side of it is going to have this lower cost to deliver that. So you're going to have a better experience at potentially a fraction of the cost, again, once it gets to scale. That is the highest order bit. All this other stuff of brand and do I know what the CEO does and did he say this and what did he say yesterday? That happens, but that is on the fringe. That is not going to swallow or consume the brand, in my opinion. Cost drives everything. By the way, that's why the Model Y, it's just, you see it happening right in front of your face. The legacy Model Y sold out because it's the best value per dollar And then they lump these discounts. Of course, they're going to go and they're going to be sold out in 29 states when they do that. It's the best product.
Oh, you're so good. You're so good, Jeff. I love it. The best explanation I've actually heard on this topic. You're right. Right. So if the net promoter score for the robotaxi is so good, it's so high, it's going to overcome a brand issue because it's just too good. People are going to keep recommending it. And you've been saying this, of course, business model matters, the structure, the price, but just the experience. It's just going to be so out there that it's going to be hard for a brand crisis to break it down. We'll see, but that's very well explained. Yeah.
Herbert, I put a post out yesterday on just Cybercab, and I wanted to specifically talk about it from a utilization perspective, because when you hear Dar Khosrowshahi talk about it from Uber, who I respect, he always talks favorably about Tesla. He drives a Tesla. He thinks FSD is great. He's trying to do a deal with Tesla. Here's the reason why. And he's talked about this in multiple interviews. He talks about utilization and the utilization queue. And if we just work together, Tesla and Uber, I've got this huge address book of all these people that use Uber today, and I can give it to you. So day one, you start with the huge address book. And Tesla is like pretty quiet on it, right? Why is Tesla quiet on it? Because they don't have that kind of address book, but what they have is a cost structure that falls through the floor relative to what you get from an Uber. So what's going to happen is think of it like a pitcher of water, and it's pouring in, and there's two cylinders, and you ever see those memes of like which one's going to get filled up first, right? Yeah. It's going through. The question is now the analogy there is utilization. The Tesla cylinder is going to get filled up full first, and they're going to get to peak utilization faster, and they're going to stay at peak utilization more than Uber. So Uber's, if they can't match or get very close on the cost structure, they're the ones that are going to be hurting from a utilization perspective. That's why they're so adamant in trying to drive a deal with Tesla. Tesla's actually holding the cards. So while they're not starting with the address book, and you're going to hear all kinds of noise, by the way, in the media, and because there's tremendous amount of advertising from these other companies, Uber Eats, you name it, fine. Uber's not an evil company. There's nothing wrong with Uber, by the way. They have a great business right now. I'm just telling you, when Tesla launches, it's going to be about cost structure. It's going to be about the price availability. And a lot of that's driven based on utilization, and a lot of it's based on the underlying unit economics of how they built the service. Both of those checks are going to go in the Tesla, are going to go for Tesla. And the utilization piece, which Uber both enjoys today, and also you see those surge pricing from Uber when the utilization's low, they're going to be in a world of hurt when this launches with the lower cost structure. That utilization queue on Tesla is going to fill up much faster and stay much higher for longer than on the Uber side. So when people say, back to your original question, is robotaxi going to should be concerned about it? Well, the answer is there may be some sort of fringe element that occurs that people try to do certain things to it, but you cannot overcome cost structure, and you cannot overcome utilization of fixed assets, which is part of the total economics of the offering.
Oh boy, I want to do a whole show on you, Jeff, on this, which is on Friday. Elon, on an all hands meeting, talked about how he's expecting at some point the Cybercab will roll off the production line every 5 seconds. This compares to right now in Giga Shanghai Model Y every 35 seconds. That's 7 times faster. This is crazy. If you can produce these Cybercabs, and he also referred to it as like a consumer electronics line that's just moving so fast you can't even get near it, which means that maybe humans won't be involved. It'll just be like mass produced, like cars and toys are. Boy, we need to do a whole show on this, Jeff. You have the most experience on this. I want to understand how this is just going to crush any kind of utilization and cost structure and all the things you were saying when you roll out robotaxi. It's just going to be so cheap to produce these things.
Yeah, I mean, when people hear supply chain and background, they immediately think like just inventory, supply management, and procurement and so forth. But my core was the factory supply chain design and manufacturing engineering design to get that click rate out of the factory, which is what is being spoke about here. So how is the factory going to be designed to hit a cost structure and to hit a volume for the launch and for the steady state, run of the product, so it hits its goals and it gets to scale. And I did this in the smartphone industry, specifically on the Android side, and a lot of things that we did back then are still in production. I'm happy to say today. But when Elon talks about this being more of like a smartphone consumer electronics operation, we are now getting the speeds that will start to mimic that, and to do something like that, you have to think about this in phases in terms of the system level integration of the product, and then also you have to get the inbound supply chain running at that rate as well, and you have to be able to balance what you're doing in the factory, what you have your suppliers doing. But specifically here, we're going away from a serialized one-piece flow process, which I know and love, and I've done that design a number of times, and it has its advantages. And we're going to an unboxed model, which is what Tesla calls it, unboxed, which is basically this modular assembly process in the factory, which I've done as well. When they talk about this 5 seconds, what they're basically doing is and we can do a whole show on this, but they're essentially building up this capital efficiency and this capital model in the factory, where it's going to be space constrained and space efficient, and it's going to be capital constrained, capital efficient, and it's going to be labor constrained and labor efficient. Basically, you're going to get a tremendous amount of output out of a much smaller chunk of land in the factory. And they're doing it by this modular assembly flow versus this serial assembly flow, and then how they build up the individual line, or the individual, call them cells or modular areas, how they build up the capacity in each of those areas and then feed the final integration step. And then everything gets redone. All the modules get redone. The painting operation's gone, but then everything you have to do to lead up to that painting operation being gone, that's all modularized and done. And so you can get that number. Eventually you can get that number to the point where you can't even see the product coming out of the factory. It's coming out so quickly, and you could size it up to whatever you need to size it up to. And there's a lot of examples in the industry. Like if you go from smartphone, if you miniaturize all the way down to example for the in-ear audio, think AirPods, think Buds, think all kinds of different products. There's all kinds of things you can do with the line rate based on the product. But this whole thing of having the auto industry cross this Rubicon and come over into more of consumer electronics like manufacturing, that's a big step in the cost structure. That's going to fundamentally shift the cost structure down meaningfully lower. And you'll ask the question, be like, okay, well, I can go buy a BYD car for $15,000 today or $12,000 today.
Exactly.
How do they do that? That is a series of trade-offs in those vehicles that you will feel like you're in a $15,000 car. What Tesla is trying to do is they stepped you down from the Model S and X, and they stepped you down into the 3, into the Y, and now they're going to step down into these affordable vehicles, into the Cybercab. They're trying to give you a premium experience, and they're not trying to let you feel like they're trying to get to the point where you don't know that this thing costs $20,000 to build versus it costs $50,000 to build. It's going to mess with your mind a little bit in terms of the capability of the vehicle. They're also going to shift more of the experiences of the vehicle from the hardware to the actual software and services that are in the vehicle, which are very high gross margin. So this is definitely a longer conversation, but the 5 seconds from the 30 seconds is basically crossing over from auto industry type assembly, which they're already kind of best at in terms of that. And by the way, China is rapidly catching up to those line rates. They're rapidly catching up. Like this, that's like they're almost caught up in terms of some of these assembly techniques, especially a company like Xiaomi, especially a company like Li Auto. They are catching up pretty quickly, but this next leap is really a big leap. And I think there will be other companies that will be able to make this leap. But now when you glue that together with the autonomy solution that you can only get in a Tesla, and then you glue it together with the cost structure going from the base layer silicon, remember, going all the way back up to the clean operation, you're getting something that's going to be very difficult to beat. It's going to take multiple years to even match it.
Yep. You articulated that very well, right? It's about reducing cost, but maintaining experience and high quality. And it's about the net promoter score. And if people do that, it'll just, it doesn't matter what the brand crisis is. We've got Tom Lee, still very excited about Tesla, despite what's going on right now. You got Nancy Tengler. I'm going to be having her on the show again. I've had her on the show before. She's amazing. She articulates it well. Let's listen to what she's saying at this point here.
Engineering will attract people to his car company.
Nancy, at the very moment that you've got, I guess, employees or former shareholders who are frustrated at how the past couple of years have played out, and they're selling the stock, you're going in on it. Why?
Well, Kelly, if you look back historically, the stock since the IPO is up like 15,200%. But over that, and that's about 41% annually. But over that same time period, it's been in a bear market 50% of the time. So this is a CEO and an individual. Read his biography if you haven't followed closely, who courts chaos. And then he just seems to course correct at just the right time. And so there have been plenty of times when the company's been in much more difficult straits than it is right now. And I think what we're focused on is the mega pack electric utility grade battery storage. So this allows green energy to continue to thrive. It's growing at about 50% annually, and is expected very shortly to be worth as much as the car business. And then you've got full self-driving. And as Tim points out, the Model Y is the best-selling car in the world. So I think once we're sort of through this nonsense, I mean, what Musk did, even though the meeting was light on detail, as was the CyberCap event I attended, We Robot, he showed up, and leadership is about showing up. And I think if investors see him showing up a little bit more frequently, the rest of this will become noise, as it often does.
Okay, that's her opinion. Do you agree with what you just said?
I think she's very articulate in some of these things, more greater than 50% of the time in a bear market. So you basically owning the stock, you're going to be in a battle the whole time. But the 41% annually is interesting. And there's these spurts of time. Bears will point to this spurt of time of 3 years it hasn't moved, or 4 years it's been quote unquote dead money, and that's fine. If you're trading, it all depends on your time horizon. If you're trading and you're looking at it by the day and week, you're not, actually you probably are kind of happy because there's a lot of volatility in those 3 or 4 years. But it all depends on your time horizon, honestly, and what your risk tolerance is. But I thought she made great points about Elon and the company course correcting, at the right time. And so I think this next 12 months, I mean, it is a get the popcorn out moment, because you're going to see unsupervised autonomy roll out at scale. You're going to have all these detractors. You're going to have all these news publications that are going to tell you everything that's wrong with it. And you're going to have very little that's actually talking about what's right about it, the unit economics, how it gets to scale, and so forth. So just, know what you own and understand, what drives value in the company. And that's honestly the innovation, the unit economics, and people's willingness to buy the product.
All right. Thank you very much, Jeff. Big show. Great show. Again, I loved your comments about the net promoter score. That's what we need to focus on. Do people love Tesla's products? Will they keep recommending it to friends despite the brand damage? That's what we need to look at. Thank you so much, Jeff. Follow him on his X account at the Jeff Lutz. Thanks, everybody. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.